That's right. No clear FU structure here at the moment. So that's just, you're in an inducement point. The other reason why you're at inducement, look left. What's this area here?
Support.
Support, right? So should we, I mean, yeah. So now what we're really looking at is how we can really ping pong the market within the thing. And this is what we're trying to do here. Okay. When on that screenshot I sent with my sell and buy limits set, you guys will be able to do that too. But all it takes is an understanding is, firstly, which trend are you trading? Are you trading the internal trend or are you trading the external trend? Okay, that's number one. Number two, are you trading on an inducement or support resistance level, or are you actually trading at true supply and demand? Making sense? Yeah.
Yeah. Quick question. That last lower high, I didn't understand why we sold from there. See where you have the liquidity. No, from the last. Keep going back.
This one.
Right there. No, go down. Lower high. Yeah. Yeah. Why did we sell from there? I didn't understand that point.
So did you guys take this sell with me on the?
Yeah, I took it. Yeah.
The reason why is, look again, right? Look where we were on price at the moment. And the thing was, we were in buys here solidly, like 100 pip move here.
Right.
Great. But the thing is, I noticed when I was just about to pop to bed, look what's sitting across here.
Liquidity.
Equal highs, right? Sorry, guys. Guys, if you guys got noise around you, please mute. Guys, please mute yourselves if you guys got noise around you. If you notice here, what's this? This liquidity sitting here, right? So this movement was just the knife through that zone, okay? And what was this candle here, right? So obviously that I marked that was London low liquidity over here, that they got snapped through here. I mean, yesterday's London low liquidity. This is why it's so important to mark everything. But you had the US session high sitting here, which got cleaned through. Yeah. All price is doing at any moment, obviously we have to work it out, but they already know what they're doing. They're either targeting a session that's gone by, or they're targeting the previous day's high or low, or a previous week's weekly level or monthly level. So it's important as price is developing to write everything down. I'm not doing the best of jobs here, to be honest. It's kind of laziness, but yeah, I've been pretty tired. But over here, I would have held this trade, but the reason why we stopped is because on that day you had the open, right? The opening price, slight push up to the high, the low, and obviously this is the close because it's coming up to the end of the daily candle. So all I was expecting price really was to do on this day was to trend down into some level here and we take TP. I wasn't really expecting this low to get cleaned out. The reason why I got cleaned out is because there was equal lows sitting here. Can you see that? Yeah, so they knifed through the upside liquidity, then they knifed through the downside liquidity. Yeah, same thing happened here last night, by the way. Yeah, but it's very intricate play on an intraday basis, right? But you have to track structurally, where are we, right? So over here, we were clearly we're making higher highs and higher lows, but this suggested trend continuation. However, from a liquidity standpoint, because they've grabbed liquidity, there is a possibility those lows get swept, and they did it. So that shifted the trend from bullish internally. I'm not talking about externally, because externally, the external landmark is all the way up here for this push. Yeah, this is the push. This is the origin of the, why is this color never right? Hold up. This is the origin of that impulse, which led to that H4 break over here. Agreed? Yeah.
Yeah.
Yeah, we're still inside this main external leg.
So this is just a external push on the weekly level, right?
Yeah, I'll go with the higher time frame. It's a bit tricky because it's a bit confusing, but I want to go into intraday because the thing is, higher time frame wise, it's not going to shift. We can go over that, but right now, if you're going to trade this tomorrow, you need to understand directionally what's going on. Yeah, where you are, which zones you are, because either you got to remember, either you're going to be trading off true supply or demand, or you're going to be somewhere in the middle where prices creating inducements and you can take those sells and buys. Yeah, obviously this is intricate play here because you need to, this is newer stuff for us, right? But you can trade this. Yeah, like how was we able to take the sells here? And I think some of you took the buys here, right? But you have to recognize when this high, this trend was they just made a lower low, and this became a lower high to lower low, right? Right? It's a new, what they're suggesting is a new downtrend, but obviously you got a liquidation of those equal lows, have you not? Yeah.
Mhm.
So what, based on trend perspective, that structure point should have held, but we pushed through. Agreed? Compressing price action. And again, the close of the day around 9. I mean, this is a much later close, but you're eventually going to have to close that daily candle somewhere, right? Yeah. So this was the open. What day so this was the open of that day right here. That open, low, high, and close. So this was a bullish candle. Yeah. Agreed? Now, when a trend, when one trend shifts to a new trend, there's a process that goes on structurally, but there's also a process that goes on in terms of a liquidity standpoint. So they again pushed up to which zone? What's left here? There's support level, isn't it? Yeah, you've got the equilibrium point, haven't you? Yeah, this is where retail traders are selling the market.
Yeah, they see that as a key level.
Yeah, so it's a key level in the market. Agreed? Yeah. Price stops on that key level. Yeah, because remember, the market is going to allow the opportunity for retail traders to come in and go into profit. But the point is here, they don't. Yes, that's a flip side. The point is, it's hard to know when to take profit because they think they're in a good level. So they're holding for this. They're holding to price to somewhere go lower here. Yeah, because it's made a higher high now. Yeah, or if they're reading this in terms of a massive complex pullback, it's still made a lower low, just a higher version of the lower low, and it should go and clean out that low, right? However, you have to recognize, and this is the hardest part when you trade, like when you can get to the level when you do this, right? And I'm trying to get to, I'm really pushing to get to this refined level in price action, but you have to understand that you are at equilibrium or the flip zone or support resistance level, whatever. This is where majority of this is why we call this the inducement zone, right? This is where the majority of people are going to get into the market. We're going to get into the market too. Yeah, because we did, right? I remember when I said to you guys yesterday, Sydney opened, and if I go lower time frame over here, so we closed the day over here, came over, this was the new day rollover. Look what we created. Yeah, Sydney highs and lows, right? And again, look, this was an induced, this was the base, right? And it came up, knifed through that Sydney high into the last buy to sell zone, right? Again, how do you know which candle to focus on? When you look at the order block here, you got to look left. So where was the last liquidity point taken on that block? So that's the last buy to sell zone, comes into it, even shifts here. If you go lower, you could have got much tighter entry, but that's fine, right? Because put your stop loss there and you get a beautiful ride down until the end of the Asian session range. So they have now induced sellers to come into the market. Agreed? Yeah, we took that sell. Yeah, some of you closed this trade, and this is why when you're in London, you cannot trade Asia because I passed out at this point. Yeah, with stop loss is the break even. And guess what? When this thing closed over here at 7 o'clock, right? Yeah, Frankfurt open. Now Frankfurt's job is what? To raid one side of liquidity. So we know they have just engineered liquidity. Agreed? Yeah. And the point here is they're trying to wipe out this structure. This, what time frame structure is this, right? So this is, I think, H1. Yeah, this was H1 lower high, H1 lower low. So now we've made a H1 higher high. We've made an internal H1 higher low. So the market is actually making highs on an internal H1 time frame. Agreed? Right? But the structure point for that push up is right over here. Can you guys see that? Yeah. So in order to make the higher low, right? Because I've written new H1 higher high. In order to make the higher low here, price eventually has to shift from this bullish market on the H1 time frame to a bearish dynamic, and then you see that beautiful downward pressure over here. Can you guys see that? Yeah. What are we making now? Right now, lower highs, lower lows, lower highs, and what should we get? Lower low, right? The buying for this move, for this impulse, is never going to be here in the middle of a range. It's just not. Look where we are right now, right? Look, what's this? Resistance level, support, more support levels. So where did price actually stop?
Right at that level.
flip zone, right? It's stopping at the, yes, it's grab liquidity, that's fine, okay, but it's not really at true supply and demand. Look, the main exaggerated move happened at true supply, right? So again, when they knife through here, and I'm going back to this diagram, so we took the sales over here. Some of you recognize the buys because the internal structure gets intact, okay? The internal structure remains intact here, right? Because look over here, you made a new internal 30-minute high, 30-minute higher low, 30-minute higher high, 30-minute higher low. So internal structure, we were intact, but at the same time, Asia low printed what? Equal lows with that candle. Okay, in real time, obviously, to notice these details is very difficult, but the more we do it, the easier to get. But again, I had marked out for you guys that we had equal highs here, and that was a liquidity knife through Frankfurt into here. Okay, so now we've got the open of the day. We probably got the low of the day. Yeah, we're expecting a bearish day because price needs to go down into what? Into these zones. Okay, and that was a sell-off in London that you could have caught. And again, you need to refine that zone from high time frame, the last buy to sell zone. Okay, maybe I should change the color of the candle. I don't really like this. What should we do? Black gray. Is that better? Is that better? What color do you guys prefer? Do you do this one? Or do you guys not like this one?
Black gray seem cool.
Well, I've been experimenting with the colors, to be honest, because the thing is, you need to see the structure. Sometimes it's hard to see what you're trying to see with some of the color combinations. I don't know what you guys have ideas about that, but that's very important for us to kind of, as a team, work out which color combination. I don't know, it's maybe different for you, but I sometimes really struggle with some of the colors to see what I'm actually looking for because they get enclosed. But anyway, we came into some last buy to sell zone, right? Yeah, this is the last buy candle into the sell. Yeah, so where are we? Look, inducement at the flip zone. Yeah, the buys into the main supply zone. So what are you going to target now? The liquidity target at that point then is what? The Asia low. And look what you printed here. This was that buy that I sent to you guys as we were coming towards the end of London. And again, it's kind of hard to do this because you have to know when to get out. But again, this was the London low. I should really label this. That at the time, yeah, I have labeled it. That was the London low. So when price came up here, not only did it clean out the London low liquidity, or the people that were buying, because now they're seeing a higher high, higher low, to continuation upwards, they got clean. Asia low got clean, and guess what? This targeted didn't sit at any POI here. It took out all that trend line liquidity, right? One tap, two, bang through the liquidity knife that was sitting here. Once you grab liquidity over here, you've stopped again at a key level of support and resistance in the market. Yeah, flip zones everywhere. Yeah, can you guys see that? Stop there, right? So again, now let's talk about what we're doing right now. I might have to change this color. Can't really see what I'm doing. Let's go. Like that one better? Is that okay? Yeah. So obviously when last night I said the internal trend here was intact, but over here, price did what? Created a higher low over here, right? But when we created a lower high and then we pushed on, made a lower low. So what's the internal trend now? Bearish, isn't it? Yeah. Our external trend is bullish, clearly, because our external landmark is here. Everyone see this? Yeah. And our external high on a H4 time frame is here. Yeah. And so externally we're bullish. Internally we're what? Bearish, aren't we? Agreed? Yeah. So now the question you have to ask yourself from your understanding point of view is will the buy for the continuation of that external point going to come from this POI that they've printed, right? I saw Scott's markup on the chat. I saw a few of you other guys as well. You got to think about it because there is a POI here. There is, yeah. I just don't like this candle structure, the way it's printed, because again, if you look left, it's kind of equal highs with here. Yeah, if you look over here with this structure, is that not equal highs right here? Did you guys see that? Yeah, and it's not really, it hasn't really reached into true demand of the market because the lowest base I can see is right here. There's a key support and resistance level. There's an inducement level right here. Yeah. So right now, the key here is recognizing which trend, like, are you trading within the external framework right now or the internal framework? We're actually trading with this internal framework. Is that making sense? Yeah. So, and then we're talking about what are we doing with this trade, right? Again, price over here, all it's doing is trying to trap people to go buy early. Again, look, trapping people, slamming them through. Liquidity being built. And again, we just knifed through that liquidity into what? The flip zone of this impulse. Even if you thought, right, and let me delete this, even if your bias may be, right, like spots, that you want to buy because you see a shift here, right? But the point here is, look at where structure, guys, who is that? Who is that, guys? Please, guys, please. We need to focus, because the thing is, we're not focused, we can't execute, right? So this is the last push into the thing, right? We haven't really shifted M15 yet. We're still bearish, right? We have shifted internally here, potentially, but we're still intacting that bit of structure here currently. Therefore, even if you wanted to think that, okay, I'm going to buy this because I think this is a BOS on a lower time frame, and I'm looking to buy this continuation to take everything out here, you wouldn't, the main buy wouldn't come here, right? It doesn't make sense. And this is something we got to be careful. And look at the markings as I'm removing them. Equal lows being printed everywhere. Yeah, you've got to really take care of this. And look, more equal lows being generated here. Yeah, they're really trying to induce people to go in early here. Yeah, even this spike in action over here is going to trick people to buy out that block over here, right? So you got to recognize where you are. Now, what I'm seeing is I'm going to trade, because again, we're in a new downtrend, right? I really want, and again, what's happened here, right? You have built some sort of, there was an inducement sell right there on that plane, because it's printing on some key level of support and resistance here, right? Can everyone see this? There's a box of liquidity, and that's what I marked being generated here. Can everyone see this? Consolidation, isn't it? Agreed? No. Yeah, it's a consolidation. So above this zone is stop losses. So this situation over here is very similar to what's happened over here last night. Yeah, when they built that box of consolidation to go and slam it through. So we have come into the flip zone of this impulse here. Yeah, this impulse here, right? So we're going to get an inducement buy into what the main area in this impulse to what the market, to sell the market down. Okay, so my TP on the buys, and again, you can enter here, put your stop loss here, or you can refine this on lower time frame if you want. On order flow, doesn't really matter, right? Because the thing is, you have to get the idea of what market is doing in terms of direction. So we're gonna go and take out these highs. Today in the market, I'm expecting what day? What do you guys, what are we going to get, a bullish day in the market or a bearish? I might be wrong, but I want to hear your opinions, because the thing is, some of you guys know the daily cycle stuff. So are we going to get a bullish day in the market, or are we going to get a bearish day on the market?
I would say bullish.
Okay. What's the reasoning for the bullish day?
Price is not creating much low lows. It's trying to induce the level that you got there, the flip side.
I mean, which market internally are we in right now? So we are in currently a bear market, because we've just shifted that bullish pressure. Yeah, we just created a lower low, right? Yeah. Now later in, and again, guys, remember what day we're coming up to now. We're Friday. So most likely at this stage, the highs and lows of the week have been printed. They're not really going to expand that weekly range. Yeah, the weekly range is around 300 pips at the moment on gold. Okay, so you're most likely going to start off with a bearish day, whether later on in the day when it hits this area, maybe tomorrow, price explodes to highs. But the point here is, I don't think this structure point is going to give the shift for the highs. It just doesn't make it, just this, it's too obvious here. Do you guys not think? Yeah, everyone's been buying, everyone's going to be buying at this level. It's a key level of support and resistance in the market, right? There's this structure point, and again, it doesn't even make sense from a like candle perspective, because like it looks like equal lows. Those candles, there's not a clear FU structure, right? And I might be wrong, but in any case, what I think is going to happen is that liquidity is going to get raided tonight, right? And this is where we'll take the sells. Now, if your idea is to buy, you can sell into the buy, into that. There's a POI sitting here right at the bottom. Okay. Yeah. You guys follow me so far? Look, it's the same pattern as last night's play. Induce the sells, keep internal structure intact, induce the buys, and then slam all that liquidity that's been created. Are you guys following me so far? Yeah. At the base, also note, you've just printed equal lows. Yeah. So remember that happens, right? So that's a key point, that inducement is going on. Okay. So we're going to trade the inducement up. Yeah. Then trade it down. It's still a nice 100 pip move. Okay. Whatever. But if you think this is a structure, you can hedge your trades here. But from my perspective, we're not really in the deep demand zones of this impulse. Remember this anatomy of an impulse. Any impulse in the market, the anatomy is what? Price goes and prints highs, right? So when you're looking for a continuation play on that impulse, I mean, you can take buys all along here, right? But what is the most probable area in the market where you're going to get the strongest shift? If that expansion has shifted previous structure, it's not going to be, well, it's definitely not going to be at the highs, right? Yeah. If you're gonna buy here, then you're buying with people who are foaming into this missed out impulse, right? It's not going to be anywhere here. It's definitely not going to be at the flip zones. It's probably going to be below the flip zones. Okay, it's probably going to be somewhere right at the bottom. Is that making sense, guys? Yeah, you have to look for those deeper retracements. Yeah, because that's where most people don't get into the move, right? It's sell high, buy low. Yeah. Now the problem here is how low is low. Yeah, and the thing is, you have a methodology to deal with that issue, i.e., what is your criteria from the higher time frame criteria? What criteria are we looking for? What's your threefold criteria for picking up POIs on
Break a structure, flip zone.
Yes, the first thing is you got to find the last sell to buy zone, which goes and creates a BOS. Now, has this last sell to buy zone created a BOS? Has it broken structure here?
From there?
Has it broken that previous structure?
No.
No, it hasn't. So how can this be the block you focus in on? Yeah, it's broken on a lower time frame, right? But that's not the external structure of this internal leg. You guys follow me so far? Yeah. If you then, I mean, the buyers might come here. If it happens, it happens. Okay. And I'll analyze that. Okay. But the thing is, what are we trying to do here? We're trying to have a consistent approach to the market, because if you don't have a consistent approach to the market, you're just all over the place with what your approach is. Okay. Yeah. I'm not making this up, guys. Look, each one of the main moves comes up above the base. The sell above at the base or just at it. This is definitely above the base over here. So it's a more consistent approach. If this POI does hold short, right? But if you're going to enter here, I would look for order flow shift as prices coming down, because this will be an exaggerated move to take out liquidity that's built up across here in Asia. Okay. In terms of actually dissecting this entire impulse over here that's just been created, you can clearly see, is there not a key level somewhere here?
Mm-hmm.
Yeah. Oops. Hold up, guys. My monitor is just shut off. One sec. Just trying to get my monitor back online. 2 seconds. Does somebody else want to share the screen once I've sorted myself out? I have to give you permission to do that. Hold up. It's this bloody cable. Okay, I think we're alive. Okay, 1 second. Got my screen back. Someone's in the waiting room. Cool. Let me know when you guys can see. Can you guys see my screen yet or not? Can you guys see my screen?
Yeah, it's back.
Okay, we back. Sorry about that, guys. Apologies. My HDMI cable for my laptop into my monitors have been bugging out, so I had to get a new one. But yeah, so in my opinion, in my humble opinion, guys, I don't think we're gonna get the buys at this POI. Well, it might happen tomorrow, but in any case, I'm not looking to buy this yet. Okay. So in terms of dissecting, if you think price is actually coming lower because you're following the process, where along this impulse, this entire move up, are you going to find the POI? Okay. Now I'm going to give you some tips and tricks on this. So I have been refining some stuff, how to hone in on it a little better rather than just going in a bit more blindly, right? And give you some more rules about it. So this is obviously, so from here, can you guys see over here? Did we not grab liquidity here? Did one candle in here, wasn't that not the one that swiped through liquidity? There was, wasn't it? Clearly. Can everyone see this? Yeah. This was the last liquidity that was created here. And then there was a last sell candle here before the buy up. Can everyone appreciate that?
Yeah.
That one here. Yeah. So which candle are we going to take? That's the one I'm going to focus in on, right? Everyone see that? Yeah. That one right there. Yeah. That one right there. Can everyone see that? Or should I make it bigger? Yeah. So in order to quickly orientate yourself to what candle needs to be taken, all you got, and this is the key rule to this, you got to go slightly higher time frame or lower, whatever. Find the last equal high or low you can see. Yeah. And then find the candle that took that liquidity, because that's the candle where the banks were initiated because they swiped up and down so quickly. Are you guys following me so far? They caused that manipulation. So you want to find the candle that caused the manipulation, which is the true order block, the last sell to buy zone, because that's where you want to buy again. You guys follow me so far? Yeah. You don't want to take this next sell to buy candle because it's not the one that caused the grab of liquidity, right? And then essentially your POI is going to be anywhere below where equal lows was taken. And obviously on a lower time frame here, you can see the last equal lows was here. So actually the POI is going to be refrained from 1747 to 1745.88. That's where really you're going to find the actual POI for the shift. You guys follow me so far? Yeah. Is that clear, guys, or not? You can do the last sell to buy zone, but the thing is, you've got to understand why you're actually taking the candle you're taking. It's all to do with where that candle took volume off the market, i.e. hit stop losses. Yeah. Is that making sense? So that will be the candle to focus in on, right? And again, so we found the block because it's the one that led to this great BOS of this internal shifting downtrend over here, right? The second rule, again, you need liquidity grabbed into POI. Now, currently, I'm not labeled on this chart, but is there liquidity sitting at this low? Is there liquidity sitting at that low, guys? Yes, there is liquidity sitting at that low. And what type of liquidity is sitting at that low?
That should be
Trend line.
Nah, it's not always trend line, guys. Like what session, what time was this? 2 o'clock, right? So this was the low of what session? That it was the low of the US session, agreed? Yeah.
Oh, okay.
Yeah, so that was this is also yesterday's low. I'm talking about in hindsight now. So this is yesterday's low. US session low liquidity. Did some of us not buy this here today? Yeah. So if you bought it today here, do you not think other people in the world bought it at this POI? Or this support resistance level? They did, didn't they? So below this point now, there's what? There's a lot of liquidity sitting here ready to be grabbed, okay? Therefore, I'm expecting this low to get wiped out, yeah, into our POI, our last sell to buy zone here. You guys follow me so far? Yeah. And again, guys, look, when I'm talking about the sell up here, right? look what I've labeled here on my POI actually. So there was, can you see there's two candles adjacent to each other? So that was equal highs and lower time frame. That's where the FU happened. And therefore, you need to focus in your POI refinement really at that zone here. That's where the sell is going to happen for gold, 1762 down. Yeah. Because it's where the institutional money came in to liquidate previous liquidity. Yeah, that's the concept here. Okay. But there's yesterday's US session low liquidity sitting here. Okay. Yeah. There's also yesterday's US session high sitting here as well. So that might be a liquidity target for down the line. Okay. So internally, we're still bearish. I'm trying to, the internal time frame, which is bearish, is trying to match the external bullish pressure created here. Therefore, the trend is bearish until we come into deep demand into the zone. So the first criteria is define your order block correctly. This is the trickiest bit of the whole thing. The second is you need liquidity grabbed on your higher time frame POI into your POI. So will there be liquidity grabbed into it? Because guys, please mute yourselves, please. The rest of us are really trying to focus here, guys, please. So there's going to be liquidity grabbed into that POI because, I mean, there's that yesterday's low and US session liquidity. So that fills that criteria. The third criteria is what? Anyone tell me? Anyone remember?
Which one did you just say?
So liquidity grabbed into POI.
Yeah.
Yeah. Number one, oh, find your OB. Yeah, the one that led to the BOS. There's not any of these ones there. Right, two, liquidity into POI. And the final one is what?
What you say, liquidity into POI, and then the flip zone, huh?
Yeah, it has to be below the flip. Yeah, so if you look over,
the flip zone.
yeah, so if you look over here, all of this is a key level of support and resistance in the market, right? Guys, if you miss the trade, so be it. But the thing is, you really want to be taking trades at high probable points along an impulse leg or an impulse leg low. Yeah. Because the thing is, if you take a trade here and it flops, you're going to take another trade here because the thing is, your idea is still valid, right? So why would you not try and take it at the most opportune time for the buys to happen? Is that making sense so far, guys, or not?
Yeah, I have a question, though. I'm kind of confused on something.
Sure.
So we're inside the internal leg of structure. We're looking to take a buy for the external, the higher time frame push, correct? Now, what time?
Oh, you mean the buy here, right?
Yeah, the buy at the bottom.
Yeah.
So what time frame is this push? What time frame is this higher low coming from?
You mean what time frame was this higher high?
Yeah, so are we looking at a 1 hour? We're looking to take a buy.
You need to flick through. Obviously, over here we were bullish, right? We made a higher high, higher low, but then we didn't break the high. We made a lower high, lower low, right? So we were bearish, but we broke through, and we've continued to push on. This is probably all. Can you see? It's all 4 hour impulse to the upside, which negates previous bearish pressure. That's why I'm saying.
Okay, so we're looking at 4 hour external. Yeah,
we're looking at 4 hour external, exactly. Okay. And that's why write it on the right here. What structurally what's going on, because its price is gonna be confusing the hell out of you throughout the day. Yeah, not gonna make it easy for you, by the way. Yeah. Also, the reason why this wick will get broken. Do you know, guys, know why this wick will get broken? When it pushed up here, was it able to shift structure here on that key lower high? No. So, whatever area it hit here doesn't have enough juice to shift structure up here. Therefore, it will now get cleaned out. Okay? It's a trap zone. Yeah?
Yeah.
The reason why it's a trap zone, again, is because, look, it's at a key level of support and resistance in the market, right, across this plane.
It's also like right in the middle of true demand and supply.
Yeah, it's right. And so there's obviously a battle going on here, right? This area, the reason why this area becomes so easy for them to manipulate, again, what kind of level is it hit? It's hit 61.8. Do you not think people are buying the fib retracement at 61.8?
Yeah.
Are they not? Am I making this up? I swear I've seen YouTube videos on the internet where people have got a whole strategy buying the 61.8 fib zone. It can work, by the way, if they just get out at sensible TPs, and those traders that utilize it that way can make money, right? But from a deeper understanding of the markets, this is inducement. They know people buy at these levels, by the way. They know ICT traders are buying at the 70.5 retracement level, right? If we know this, do you guys not think those guys creating the bloody algorithm don't know this? Yeah, they do know it. Yeah, and therefore this wick is not gonna hold, right? In my humble opinion, right? If it does, it does. We'll learn from it, right? Because I was wrong about this, and so you learn from the ones that were wrong, right? But the key here is if you were on the morning team call that day, the point here, guys, if you miss one trade, don't stress yourselves. There's so many more opportunities in the market. It's just one trade that went, and guess what? It's retracing back to the origin tomorrow, most likely. Yeah, you just missed a nice move, right? And that would have been a nice move to get in. Okay, but you learn and go back where you misread it. So as soon as that happened, I went back on lower time frame and checked. Okay, I missed it. There was actually equal lows raided into area, and some of you guys labeled that shift, and it shifted nicely. So that was actually a nice trade, and it fitted from a daily cycle perspective as well. Yeah. Okay. But this is why doing team calls on a live trading environment is kind of difficult, because you need to be focused. Well, I need to be anyway. Sometimes it works, but it doesn't. But that's okay. But everyone understand why I don't think that wick's going to hold. Yeah. Why is this structure here able to stabilize price when it comes over here? Because it led to a BOS. Did it not? Yeah. This has not led to a BOS yet. Yeah. So it's not going to really hold. Yeah. Yeah. So I'm really looking for price to come back here, retrace back into these zones. Because again, there's people that are going to be seeing a downtrend here. They're going to get screwed over because again, look, they made that box of consolidation. So they're going to, once the price goes up here, I swear to God, there'll be some people trying to sell this block here. Yeah, or put their stop loss there, right? When price, I hope this happens, but when price comes up over here at this block to sell tonight, they'll get cleaned now. Yeah, so look, they've taken out all the stop losses here now, right? Great. And then they come into some deeper zone. And again, we need to refine this zone. See what we're looking at. So again, look, you can clearly see you've got a buy to sell zone here, but I kind of want to focus in the last two candles. Yeah, because I really want to evaluate price as it's coming here. Yeah. So I've left that zone a bit wider. Okay. But you can refine this further. This is like a 3-minute refine. There's an IFFC here. And again, look, that probably will be the candle that gets hit, because look, there's liquidity, and therefore somewhere here just above where liquidity was taken, that was the candle that caused the grab of orders, right? So therefore that probably is the candle, guys. 1762. So that's where I've put my sell limits on gold. Yeah, you guys following me so far? I put my sell limit at 1762, and I put my TP for the buys here just below it at 1761. Yeah, or 1760. Okay. Yeah. So the thing is, you can't do that if you don't understand really what's going on. Okay. Yeah. First thing you got to understand is really understand, am I still trading the internal trend to the higher time relative external trend, which is 4 hour as we established? Yeah, and you can probably write that external 4 hour bullish. Yeah, 4 hour right now. Yeah, and the internal right now is what time frame? Probably let's go. Probably 30 minutes. Would you guys agree? Yeah, 30 minutes, right? Yeah, or not? Someone with me?
It seemed the cleanest.
Yeah, the cleanest, right? So you can say even 15, 30, whatever, 15, 30. So clearly follows our philosophy that the internal is always the lower relative to the high, okay? Yeah, so again, we're trading the internal structure now. So internally, we're in a lower high to create a lower low, and we've established that this is not going to hold. If you also look lower time frame, you've kind of created equal lows with that wick here. So there's some inducement happening here. Why would they not clean this out? I just think, why would they not? They just, like, the whole world bought gold at this level today, right? We all did. Yeah, because from a fib retracement perspective, it hit discount levels for discount premium traders. It hit fib levels. So much volume in the market is here right now. Yeah, I don't know if the volume profile shows this. So again, look, volume profile is showing empty contract volume just below that zone. It's not really showing it at that zone. Yeah, there's liquidity sitting here. Can you guys see this? Obviously, and look where the most liquidity is sitting right now. Can you guys see this? The most transactional volume is around this consolidation. So was this not inducement happening in the market? Look where volume empties, by the way, 1761, 1762. I'm not making this up, yeah? And I didn't even use the volume profile because the thing is, you've got to understand from a price perspective, like from an intention perspective, what's going on, okay? Yeah. So probably based on volume profile, we probably need to refine our sell limits to 1761, 1761.50. Yeah, I never really trade with sell limits, to be honest with you. Like, but it's getting our understanding is getting to the stage where we should be able to put this monitor is killing me, guys. Hold up. I smashed the screen on my new MacBook, so I'm having to use an external monitor, but this MacBook is not the best for charting anyway, because I've got the 13-inch screen and it's just too small.
Do you have the M1?
Yeah, I've got the M1 chip, but the thing is, I don't like it. I mean, it's fast, but the screen is so. I wish I had got this is off topic, but it's important as well. So obviously, before I was using my old MacBook, which I had for like 3-4 years, all through like mid school and stuff. But the new old MacBook Pros obviously had a wider screen, and I had a MacBook Air as well with the 13 inches, a wider screen. You really need a wider screen when you trade because you need to see the details, right? But that was a bad decision on my part, to be honest with you. So if you're thinking about going down that route, don't do it.
Don't do it, because I was thinking about the M1 Mac because it's faster, but I heard MT4 is not working on it.
No, it doesn't. It doesn't. MT4 doesn't want to. If you got to use MT4, you use like an online one of the ones for the brokers.
Oh, okay.
Also notice the detail here, guys. Remember this wick here, and look what it taps into. The first this resistance support level for this actual last
We can't see your screen, Erdy.
Oh shit! Sorry, guys. I was going off on. Yeah, what was I talking about? So yeah, so if you look over here, yeah, on a 5-minute perspective, that wick before price has been going down like a maniac over here. Yeah, it hit what zone? It hit a key level of support and resistance in the market. Can anyone see this? Yeah, there's a key support and resistance level just here. So obviously the main sell-off is just going to happen above it. So 1762, I think, or 1761.50, you can trigger your entries if you're going to sell them there. You guys follow me so far?
Yeah,
guys, please don't do that. Obviously, the guys who don't have noise, please interact with me. But the guys that something's going on in your background, just switch it off. Yeah. So anyway, sell limit here. We're in buys here. Okay, right? I kind of widen my stop loss at the end of the day's close because I don't want to be caught out when spreads widen when gold reopens, right? So the thing is, if you take a trade at the end of the day, be cautious of that time. You need to widen your stop loss just because when it opens, it might like widen and take you out just like that, even though you're in the right direction. So just be cautious of that. So in terms of how this trade's going to build, yeah, I think Sydney's going to open from 11 till 12, right? It'll create a range. Now, it might get held, right? Because they might need that liquidity to push down through later. Yeah, so we might just get a trend all the way, and that liquidity from Sydney gets spared on the downside, and it will be used as fuel later. You guys follow me so far? Yeah, but I'm really expecting a bearish day. So I'm expecting this to be the open, that to be the high of the day, and then we're going to print the low and the close. Okay, I don't think we'll get much range expansion tomorrow from the weekly range points, right? I think that the price is setting up for those moves next week. Okay, you guys follow me so far?
Yeah, when we're speaking of open, low, high, close, we're talking about the Asian range, correct?
I'm talking about the daily candle. I'm not talking about the
Daily
Asian.
candle.
Yeah,
But it starts at the beginning of the Asian.
yeah, of course. Yeah, of course.
Okay.
Yeah, it starts off as Sydney, right, which is part of the Asia Sydney complex. Yeah, 11 o'clock. Yeah, that's going to be the opening candle. But I'm thinking they might need that liquidity from Sydney low because they want to protect it and use that liquidity later to come down, right? The alternative is because there's a POI somewhere lower here, they go and grab that Sydney low liquidity, and then they're definitely flipping the highs later in that session. Yeah. Yeah. This sell should come towards the end of Asia, to be honest with you, 3, 4, 5 o'clock time when the Asian range is finishing. Okay. Yeah.
Sorry, I would like to
We-
the best time that we can see this. We can analyze this daily range easily. The best time frame.
What do you mean the daily range? Which time frame to analyze that?
Okay, this is what I mean. Like the way you're on 10 minutes time frame now,
Yeah.
and see what your daily range is going to be like. Now, what other time frame, or what will be the most appropriate time frame whereby you can see this clearly?
The daily range
Yes.
in terms of what candle you're going to make.
Yes. Which time frame will be appropriate to see it clearly?
I
Like
mean,
the way
what I'm talking about is nothing to do with time frame. It's talking about how we're going to build the daily candle if there's a bearish candle, right? I'm not expecting a bullish day tomorrow on this pair, right? On gold. I'm really not, right? So I'm expecting price is going to give us the opening price because it has to, right? Thank you very much, Mr. Price. You're going to have to give us the opening price, right? When it creates the open, right? Most likely the course of a bearish day is what? You go and print the high of the day. Agreed? Then you go and print the low of the day, and then you print the close. Are we following so far? Yeah. So all I'm breaking down now is how do we get from now I'm going deeper into the daily candle, right? So this is surface level understanding. Yeah. How we what are the 4 landmarks of that daily candle? That's surface level understanding. But now I'm going deeper into it. How are we going to go from the opening price, open, right, to the high of the day? Yeah. How can we trade that? And this is what we're trading. Yeah.
Gotcha.
Yeah, this is what we're trading. I'm really breaking up now from landmark to landmark. Then how is it going to build from the high to the low? Yeah, and then from the low to the close. You guys follow me so far?
Mm-hmm.
Yeah, and again, guys, what day will you get tomorrow in what kind of Asian session range will you get? Will you get one side liquidation model? Or will you get a 2-side liquidation model? You will get a 2-side liquidation model, most likely.
Because you're expecting, if we're expecting the day to be bullish, to print a bullish candle, then it'll be Asian be both sides liquidated.
We're expecting a bearish day tomorrow, right? We're expecting I'm not expecting a bullish day tomorrow. Yeah.
I said bullish. I meant bearish.
Yeah. The more poignant reason is the external landmarks of structure are where they're here, right? The external structures here. Yeah. So anything building here, a box, is going to always be liquidated both sides. You guys follow me so far? Yeah. It's not the money, the stop losses are here at the moment for the banks. Okay. Yeah. They're not in these internal landmarks. Okay. This is external structure on a lower time frame, but on a higher time frame, our external landmark are this one and that one. Okay, so whatever Asian session range builds here is going to get liquidated to the downside and upside, both sides. Okay, we'll have to see how that develops, but I'm just giving you some ideas out there to think about it. But really, this is the first part of this day, isn't it? How do you get from the opening price to the high of that that daily candle? Okay, yeah, and at that point, there's inducement that's going to come in because people are going to be looking at this block as a buy block. Change the group. Yeah, they're going to be looking at this as a buy block, right? Yeah, because on a lower time frame, they're seeing a bullish trend, but they're not ignoring the higher time frame internal bearish pressure. So they're going to be trying to sell the market here like this. Yeah, and that's probably where the Asian low is going to be printed also. It's going to be double inducement being built here, right? I'm assuming if there's Asia low is going to be printed here, that will get cleaned out into this zone, right? So now you're going to have a midline trade probably in Frankfurt to come and I don't know. It depends. It's hard to visualize basically how the Asian session range builds. I've got to see it, but if it does build that way, there might be a. I mean, I don't know. Yeah, we'll have to see. But anyway, the Asian range might be like this, right? Where Frankfurt comes here, liquidates into London. That's more probable. London then gives the push down and liquidates the low. Yeah, just like today. Yeah. So if you look at the day today, you had Frankfurt pushing the high, London pushing the low. We might get the same model of price action here. Okay, but forget that, right? Focus on how price is going to move from the landmarks that make the bearish structure. So you're going to get the open to the high, highs to the low, and low to the close. Okay, yeah, and then we're coming into this key area of supply and demand in the market. Yeah, probably you can already mark this ahead of time where you're going to get inducement buys. So you can see this bit of structure here. Can everyone see this? Yeah. That tapped into that resistance support plane. Yeah, I would mark that level right across here because that's where price is gonna, when it slams through here, is gonna initially stop, because now they're trying to build inducement for the buys next week. Okay, it might even happen tomorrow. That bearish day might turn bullish later, but I'm talking about the initial outlook for the day. Okay, but that inducement is going to happen at that plane over here. Over here, we really want to engineer liquidity or see liquidity being engineered with those candles over here, right? The reason for that is because we're looking for shifting buys. So we really want the engineering of liquidity over here, that liquidity to get snapped through, right? And then we look for our entry protocol for buys. Are you guys following me so far? Or not?
Yep.
Yeah. That's what I'm really looking for. Because then again, the criteria now is fulfilled from a higher time frame POI perspective below the base, that led to the BUS on the H4 time frame, and you got liquidity being grabbed into it. Today's Asia session low, that's going to be building the previous day's low and US session low, right? Yesterday's low and US session low liquidity. And then we've got, as prices approaching up here, and this is where it's going to be so hard for everyone on the team, because they're going to see IFC here, let's take buys here, right? But the thing is, you're so far away, you're like 50 pips away from the range low still. Yeah, you're doing suicide to yourself, because the thing is, if you get stopped out here, you're still going to want to take buys at these lower levels because your idea for the buy has not been negated yet. Yeah, the idea of the buy only changes once this low gets wiped out. Yeah. Right now, we're looking for buys. So if you buy at this POI here, it's like you're taking unnecessary L's on your account if it does go against you. Yeah, of course you might get some reactions. Of course you will. There might be supply and demand zones here. It's a filling of price. So you are going. I mean, why is price going to shift it? Because people trade imbalances. There are going to be inducements at these imbalance zones too, right? Yeah. It's not just us in the market. There's like a bunch of people, right? They're all trading different strategies, different kind of philosophies, but you got to look, right, where all the key structures, they might produce buys. But anyway, the key structure where it's going to print equal lows, I think, will be that plane there. Yeah, because that's the last thing over here that hit that equilibrium point. Okay, built. So they're gonna entice people here at this zone. Actually taking a buy here is not bad, because actually you're only 30, 20, 25 pips away from the low. So you can do it. But the thing is, then you have to, if you're going to do it in a precise way, you're going to have to go into your entry model, like pre-entry confirmations and entry confirmations. Okay, just like some of you guys did on this buy here. So pre-entry confirmations, that building of equal lows on the lower time frame, F you through it, entry confirmations with the entry protocol. Yeah. So everything here. So that's why I put the buy limit here at 1748. Yeah.
Right.
Does that make sense? It wasn't just like me being like, oh, by the way, let me just do this random occurrence of things. I was really thinking about, what am I trading here? Where price is inducing? So right now, all I'm trading right now is the inducement portion. That we missed the inducement sell here. Yeah, 1759 to 1753. We missed that inducement sell. Can you guys see that? Yeah. Again, we had an internal temporary trend here, which got wiped out. So they're going to now do what? Induce people to sell early, and you can ride that down with all those people, right? Retail traders. Then they're going to F you those people into here. Yeah, which is what we're trading. Then we sell the liquidity grab because they grabbed all that liquidity above here. So we're trading the liquidity buy side grab. Now we're going to buy the liquidity grab as it's come into lower zones. You guys follow me so far?
Mhm.
Very important model, this, by the way. This is how it happens. It's not just a structural shift. If you actually want to trade it, that's what you have to understand. Yeah, so they're going to do here, shift the trend right over here. But now what they got, the problem is they made a new high here, right? Yeah, on this time frame, they want to come into these lower zones. Okay, how can they do that? They can't just come down, right? What they got to do is trap people here in a box. So they're going to start consolidating here. Yeah, give them a little bit of breakdowns on some lower time frame trends, right? So they start selling here again, and guess what? Price creeps up to this level, gives a little reaction, bang, straight through, because there's all this liquidity being engineered here. At the same time, now they've engineered liquidity in a box like this. So now, as price FUs, and guess what they did? They slammed everyone, buy side and sell side. And look, and I'm not kidding you not, as price is going up here, what are your emotions doing? Some of you might have felt it if you were trading here this morning. What are your emotions doing at this point? You're feeling FOMO. Because why are you feeling FOMO? Because you visualize, you forget all your rules about the base, like the anatomy of the impulse. We all do it. I mean, I'm talking facts here, guys. We all do it. The anatomy of the pill impulse or whatever. We forget all that. We're like, well, this is kind of a pullback. What if this is the continuation of that move? Yeah. So guess what people do? People start putting buy orders in the market up here. Yeah. They start stacking all these buy orders here. Yeah. As price is hitting some supply and demand zone here. Yeah, as it's about to break some structure point. Yeah, over here, maybe. Starts because they're like, it's going to leave. And guess what price does? Plays around a bit here. And they're like, oh, it's just internal liquidity being graded or whatever. Yeah. And then guess what they do? They crack it down. And that's what they did today. Did they not? Yeah. But again, before that move happens, you'll see, and the moves happen is they're shifting internally on a lower time frame to just go, oh, yeah, to come into the deeper zones. But again, they come into the deeper zones, they can't just go to the deeper zone because again, they have to screw people over. So what they do, they go to some middle zone. Yeah. Start enticing. So give a reaction here. Break some internal. Let me do this slightly better. So there'll be a middle zone of the range. Yeah. Probably you can do it this way. You can think about it that way. Mark out your fib levels. And this is how you probably find those inducement levels, right? Mark out 61 and 70.5. Okay, because this bit of the premium discount spectrum is where the inducement takes place. Everyone agree with that or not? Sometimes you get the moves there. I'm not talking about sometimes. The thing is, I want us to catch the moves where they happen the majority of the time. Okay, yeah. Sometimes there's different ideas in play. I understand, right? But over here at the 70 thing, they're going to come down over here. Now they've obviously done what? Definitely wiped out that structure point. So we're internally in a bearish market, aren't we? They come over here. You hit some zone here because buyers go in now because they see 61.8 retracement, reflex trade, no confirmations, reflex trades at 70.5. Price starts trending up. Let me just draw this again, because we want to show the internal trend here. So there's obviously going to be an internal trend creating this pressure here. Yeah, you get that reflex reaction of price here. Yeah, price shifts up here. And guess what now they're doing? Yeah, you're going to get people screwed over on both sides because what is there? There's a mixing of trends, right? You guys with me? There's a mixing of trends at this point. You've got people ignore now you're in an internal dynamic market to the downside, but on the converse side, people are seeing this as a BOS on a lower time frame, so they are looking to buy this pullback. Yeah, but over here, when this happens over here, guess what price will do? It will start screwing around and creating another consolidation block as it's coming down over here. Yeah, it will stop at equilibrium again. So now you create another consolidation block. Okay. Yeah. What's going to happen now? They're going to screw these people over. So they're going to snap the stop losses here.
Let me get headphones.
That's when the sellers come, right? And then they continue it lower because now they screwed everyone that bought here. Yeah. Are you guys following me so far? Yeah. Because these people buying here are looking for the main move up because they see the 61 pullback. Yeah. You guys follow me so far or not? Yeah. These people that that are going to be buying when price is hitting here now, right? And this because they see a higher high, higher low over here, they get screwed over as well, right? These people get screwed over. Yeah. They get screwed over as well. Okay. So you can see how the market makers are hitting everyone's stop losses. Yeah. Did the sellers not get screwed over there? Yes, they did. They got screwed over there as well. These guys got screwed over as well. Yeah, they got screwed over here when price shot up through all that liquidity above it. Yeah, does that make sense? And then people who sold it because they're looking for trend continuation to break these goddamn lows over here, they're gonna get screwed over as well. Yeah, they're gonna get screwed over because when price then comes to external landmark, now it wants to buy. Yeah, and guess what? No one's in the move but them, or very few people. Are you guys following me so far? Yeah, so even people who would like us sell up here, go and get screwed over because they're holding for that long-term internal bearish pressure now, aren't they? Lower low, lower high, lower low, lower low, lower high. Yeah, they're holding for a longer term sell to take these lows out. Did they not just screw everyone in the market? Someone tell me. Yeah. So then price comes into some zone here. There's going to be a lot of fuckery going on this zone down here as well. They're going to be building liquidity because they know, okay, some people a lot of people we killed, but there are some people that kind of know what's going on. Let us kill those people so they can't actually get into the move that they really wanted to get into. You guys follow me so far? Yeah.
Yep.
Does that not happen? Does that not happen when we are our true POIs for shifts? They screw people over because they start creating Wyckoff schematics that don't work, right? Liquidity being engineered because people don't have that philosophy where they really should be buying and selling in the markets, right? It's to do with that equilibrium idea or that flip zone idea. It's really pivotal. But before you can start doing what's the right thing in the market, yeah, you got to be able to see where people are getting screwed over. You guys follow me so far? Or not?
Yeah.
Has gold opened or not? I think it has. Is it closed today? Does anyone know? Are your gold charts moving, guys?
Yeah, it should be open.
Weird. My FTMO one is not moving. But anyway, do you get my point? What I'm trying to show here, right? The only way you can start trading the inducements and the actual true, they're not even true moves. They're like one move within the market that's designed to take liquidity, right? There's a purpose for this move as well, right? You've got to really see where people are being screwed over. Okay. Yeah, and where the fear is. So even just like up here, when price is trending dramatically down here, what's the emotion at the bottom of here? FOMO, because you don't want to miss this trend that you see building here. You guys follow me so far? Yeah. You don't want to miss this, right? So what do people start doing? They start selling at the lows. Yeah. Obviously, teaching it like this, we can all see it. Yeah. We can all talk about it, but in real time, to appreciate what's going on in the market and where they're getting screwed over, you really have to be able to see this thing over and over again. Yeah.
Got a question for you already.
Yeah, sure, no worries.
Okay, so the ideology behind the way we're trading, we're trading the Asian session, correct? But then also we're also trading the high and lows of the day.
Yeah, I mean, you don't have to trade Asia, guys, to be honest with you. It's just
Well, not necessarily trading Asia. So you gave us the time for the Asian session, right?
Yeah, so the Asian session range I've been kind of was tinkering with what time I wanted to talk to you guys about this. So obviously you guys saw like midweek I said I'm going back to 10 to 6 and then, but I think we got to keep that 10 to 7 time. Yeah.
Okay, 10 to 7.
I tried to go back to 10 to 6, but then in my mind I was like, this just makes no sense. What is that 6 to 7 o'clock hour? Like what session am I looking at if I isolate that? So it has to be 10 to 6 or 11 to 7 for FX pairs, because actually Tokyo ends at 8, but I'm accounting for 7 o'clock, i.e. the Frankfurt hour, which Frankfurt does its business, right? So like today, Frankfurt did what? Frankfurt raided the it went, so Asia closed here, Frankfurt went and raided the high.
Right.
Yeah, so that's his purpose. I tried to go back to 6 o'clock, but it's just like it doesn't feel right. Yeah, I'm kind of cheating the markets there by saying it closed at 6, and it's going to get confusing. So stick to 10 to 7 and 11 to 7. Okay.
Right. So we know the ideal times to look for trades within the Asian market, but what about the ideal times after the Asian range?
I mean, you know these times. We went through these on the daily cycle call. So this time over here was 8 o'clock. Yeah, London Open. Yeah, London Open is a very important time, 8 o'clock. So obviously it's rated. London, Frankfurt into London has raided that liquidity. Now London will do the opposite push. Yeah, and you're in a two-side liquidation model because low is not printed on structure, high is not printed on structure. You guys follow me so far?
Yep.
So and again, guys, where this is going here is all to do with what I'm talking about here. Yeah, they have built up liquidity here now. So London is definitely going to target, the algorithms are going to target that liquidity that they created here. So a lot of liquidity here, equal. You've got the Asian session low, you've got equal lows in that consolidation block, you've got trendline liquidity. So you've got fear and panic encapsulated in this area. There's a lot of stop losses happening here. Again, and when the collapse happens, people are buying at the trend high for this current trend. So they will get stopped out here as well. Yeah. They screw people over here and they screw people here at the top. Yeah. They screw people here because of emotions, right? You've got to now start as if you're going to, and look what's happened to gold. It's absolutely gone ripping. Am I making this up, guys? I'm not, because the thing is, now you have to not only understand the markets from a technical point of view, and I'm giving you some like really good frameworks to base your ideas on. You have to understand the market also runs on emotion, doesn't it? Agreed? Everyone, I'm sure everyone's felt like buying when something is ripping through. You're like, I'm gonna miss that trade on gold because long term, I'm projecting this to 1860. What if this is my only shot to get into the move? You'll enter in the highs. At that moment, when that feeling comes, by the way, guys, you got to recognize what that feeling is, because that's the market's emotions reflecting on you. That's what they want you to feel. Yeah, we're gonna feel. We can't tune those feelings up, but what we can do is develop our awareness in the market that, yeah, guys, I FOMO in too. I really do. I FOMO in a lot as well. So I'm still a young trader. You guys know this, right? But the point here is if we can build our understanding of the markets, right? Every day I look at these markets, right? Based on what we know, right? And the work that I've done, I'm like, there's no move on this day if I was a bit more locked in that I couldn't have taken, right? This is not like going from a point of view of an ego thing. It's more to say, if we just slow down, put the brakes on and actually think about what the hell is going on. Are you guys all telling me we couldn't have taken that as the London high sell? We could have. Right? We didn't, but now we need to review what was our thinking at the time while we didn't take that sell, and what has to be the shift in our approach and our mindset the next time we have the same situation, we can take that trade. You guys follow me so far? Yeah. You'll have days like this in the market too. You'll have days. Yeah, gold open up. So you'll have days where you know what's going on, but you quite can't execute on that approach. Okay, and that's probably the emotions taking over the technical approach. Okay, yeah. If I put replay mode on, trust me, guys, this is what I felt this morning. I'm telling you, right? This is screaming through. I'm like, oh, that was the higher low, and we're going to scream higher, right? So the emotion here is FOMO. You got to recognize that. Yeah. And guess what? They reverse this, right? So all the people that start to where's the bloody thing over here? So all the people, yes, who they screwed those, see, look how dynamic those collapses are. So then you're like, oh, never mind, it's just coming on to lower structures, right? So you're still thinking about buys at this time, but internally we just shifted here, right? And you're ignoring all this liquidity that's pent up here. Yeah. And it just basically comes into the last buy to sell zone and it just cleans through, right? There's nothing, I mean, I played it forward in a slightly higher time frame, so it's quick, but candle by candle, and this is building, it's obviously like there's emotions here and here, right? But you got to take a step back, okay? And again, look, that principle, that philosophy I just described here is happening here now, right? They've come and clean liquidity. What level have they come to, right? They come to levels where they're going to, where they know people are going to be induced or enticed to buy and sell, right? Again, emotional frameworks, right? They come to 61.8 fib. Some of us took this buy. Goodbye, because you're trading with retail inducement. Nothing wrong with that, as long as there's nothing wrong with that, as long as you know what's going on. Yeah, you get a nice buy. Yeah, you break some sort of internal structure at 1761. Okay. Yeah. So also look, the candle, the ways candles printing on here is very strong. So your emotions are like, yes, I'm in a long-term buy. But you don't realize, even if the market had to, you're going to have to look for buys, it has to shift that pressure. Yeah, it has to shift that pressure it's created. Okay. Yeah. So you have a shift over here. You have an internal shift, but the thing is, you haven't wiped out that external leg pressure yet. Yeah. So now they're confusing people, right? So now they're going to start trapping people internally here, right? And creating that consolidation block. So they start consolidating price here. Yeah. Can you guys see that? Why would they consolidate people here? Like, what's the reason for them trapping people here on both sides? You got to think, right? So they're trapping people for several reasons. They're putting, because people now see this consolidation block and they're trying to trade the breakout, stop losses, buy stop, sell stops on both sides. At the same time, people are looking here because now they see an internal new trend pulling through. But the thing is, this push never broke the external landmark for this downtrend at the moment. Yeah. Therefore, it's not a valid zone that's going to shift price. Also, equal lows being built. People are setting up buy limits here. They're waiting for buys over here. A lot of fuckery is going on in the markets, right? So, do you know what I mean? There is a lot of commotion being created. And guess what they do? They go and this was the inducement sell. So in this model over here, this is the inducement sell now, right? Once internal microstructure is shifted. So that's the inducement sell into what now we're going to get the inducement buy. Yeah. Yeah. They're also screwing people here. They're creating equal lows. Yeah. FU. Still not the true move, right? It hasn't come into that yet. There we go. So they do some complete fuckery, but now this is the inducement buy for the taking out of liquidity over here and to screw people over again. Yeah. Yeah. When prices come in over here again, emotion is going to be running how people are going to FOMO into the buys here. People are waiting here because now they see, ooh, nice shift, higher high, higher low. We've shifted trend here as well. Ooh, double shift. We're definitely going higher. No, you're not. Because you've got to remember this zone in the middle of discount premium is just nonsense. It's just this entire area here is complete manipulation in the markets. You guys follow me so far? Yeah? Or not? Yeah. So when things are developing, guys, and again, this is a good thing we can all do. Literally put a fib on the thing, yeah? And I want you to physically mark out from 70 to 60.8. That's going to be pure manipulation. Yeah. And just above it or below it, it's just going to be manipulation. These are your levels here: 88 discount, 78. These are the levels we've produced the main buys. Yeah. if you were, I'm thinking from a perspective of pure economy here, right? If you wanted to buy something really expensive or whatever, yeah, would you not look for that thing to come at a discounted price and then jump in? Yeah. Now, when I dropped the mentorship to 200, did a lot of you not just be like, let me go in for that, right? Because it was heavily reduced. Was that not correct? Yeah. Was that not what happened? Right? Because you were looking for that price to come to extreme discount, which is the best play as a consumer to buy, right? But if you are a seller in the market, where's the best point to sell your product? It's not at 50%, is it? Yeah, you want to be selling. If you are the manufacturer of Ferrari or McLaren, right? You come out with the new McLaren, I don't know, 920 PLT. You're not going to be want to selling that McLaren at 50% of what it costs to build. You want to sell that McLaren at the bloody premium price because you know someone will pay for it. That's how the markets work. Yeah. So does everyone understand the concept of the manipulation zone around the 61.8 levels that goes on? Or not? Everyone clear about that?
Yeah.
Cool little concepts, right? Yeah. So all of this basically, I mean, this is just stuff I was thinking about today as price was developing. So, you know, you will all have those insights as well, because I mean, I can't think of no other reason why this nonsense happens in the middle. And the thing is, it screws over everyone. People who knows what's going on, people who have got their emotions in check. It's just an area of like solid manipulation being created and emotions being created. And again, here last night, all of this area here, it's just an area where emotions are being built. And obviously emotions are at the highs and lows of trends, right? You've got to recognize that. You've got to recognize which phase of the market you're in right now, right? So you're in the manipulation zone. So from now, we're going to develop our understanding, anatomical and structural anatomy of what an impulse, right? The anatomy of an impulse is. Again, the most basic version of events is, if I made this bloody green, the most basic version of events is that you have higher highs and higher lows, right? Now we deepen our understanding of that further when I said, well, basically there's something called a flip zone, right? Which is all to do with the key support and resistance level, right? Where there's going to be lots of things. And that's again to do with the range impulse being at the manipulation zone. So if we're going to deepen our understanding further of this, you then now recognize that somewhere in this range, there has to be manipulation that occurs in order for the banks to take the volume off the market that they want to, because hitting stop losses, so they can continue to drive the next trend. You guys following me so far? So now the anatomy of the impulse gets further refined, that now between the 61 and 670.5 levels and even 50% levels, you're going to have manipulation of price. Yeah. So when price then comes down over here, right, and shifts this internal trend over here, because now over here, because they want to confuse you, you've got an opposing external architectural view and you've got an opposing internal architectural view. They want to confuse you over here, right? I was doing some hokey pokey, right? But this is just all solid manipulation to come into your zones below that flip zone, and then you can hit up. Yeah. You guys follow me so far or not? Yeah. Does that make sense, guys, or not? Yeah. Manipulation being created, manipulation being spiked through, manipulation being spiked through to the downside, and then continuation. Yeah. Manipulation, liquidation, what is it? What's that thing, that acronym that everyone goes on about? Manipulation, liquidation, continuation. That's what it is. Yeah. The cycle. Now you have, does everyone understand the anatomy of the impulse a little better now? Yeah. Yeah, very important. So you got to know when you're dealing with any impulse. And again, you should have this diagram like you're at university and you're learning about something important, because the thing is, it is. You should label at the top, I'm going to feel some bloody emotion because now the trend's at a bloody high point and I'm scared, FOMOing that I'm going to miss this move. Yeah, you got to label it here. I'm going to have emotions, right? Are you going to label in the middle? I'm going to get, the people are going to get manipulated there because this is the manipulation zone. Yeah. Yeah. And you got a label where true supply and demand sits. Yeah. So there's that. Everyone follow me so far on that? Yeah. Now, if you look at Dixie, our best friend Dixie, slightly higher time frame view. Yeah. Look what happened to Dixie. Strange, that isn't it? Equal highs being built, and then it hit true supply, and then it's starting to drop. Yeah. Can you guys see that? So gold long term is a buy still, in my opinion, because this looks like it's going to sell off. Yeah. And again, I kid you not, look, there's some manipulation that happened here before something over happened, before they shifted over here after raiding liquidity. Okay, so those manipulation concepts I'm talking about, they're a true phenomenon in the market. It's not just a made up thing. It's where real fear, greed, whatever, all those emotions that are to do with money interact into like a boiling pot where they can screw people on each side. Okay, so any questions about any of that so far? Are we good?
I'm good.
Should we call it time there, guys, or not? Should we call it time there, or any more questions?
Can I ask you a view on pound yen?
I haven't really looked at that all week, to be honest with you guys, but I'll have a quick look. Pound yen. What chart has got my markup? I think it's 4 hour. I might have deleted it, I don't know. So yeah, that's definitely bullish now. Yeah. So wiped out internal pressure here, made a higher height. And again, look, came down into 61-50% of this range. A whole bunch of manipulation happened here, right? Then they came back into lower zones, hit that. Yeah, now it's just in trend. Now it's trying to break this high. And there's an Asia high here. Okay. Yeah. This move was there for this today. I saw it, but I didn't trade it. Just focusing on one pair, guys. The thing is, if you want to intraday, like, I definitely want. I'm not one guy that can flick between 5 pairs on an intraday basis. Yeah, it's just, it gets too hard to manage, right? Because gold's going to be flying up. I'm having to deal with the emotions of being a gold trade in a gold trade. Then I'm looking at pound yen, like, it just doesn't work for me. Yeah, it might work for you, right? But the thing is, when you're trying to cultivate your skills as a trader, you really need to have that focused time with just one pair. You guys follow me so far? Yeah, it's good to look at other pairs, right? You might be trading it, but you need, yeah, maybe, guys, don't, no maybes in the market. Yeah, I don't want to see no maybes from you guys. If you guys have an opinion, right, say it convincingly and then talk it through. Yeah, talk through your ideas. Like, what's the reason that you're saying it's going to range? Like, I mean, if you're going to have a daily candle that's just going to be in a range here, is that the idea that we're just going to range between these 2 points here? I mean, it could happen. I'm not saying it's a bad idea, right? So let's think about that approach. If you're thinking you're going to get a ranging day, right, something like this, right, could happen. Then you got to think, well, open, you're thinking the high is somewhere here, low and close, right? But then you lost all your liquidity concepts that we've been learning. Your concepts of, you got yesterday's low liquidity here. They're going to have an Asian session range, which we know won't be protected today. It can't be protected on both sides. It's going to get liquidated on both sides, sorry, because externally, the external landmarks are here. Yeah, so how can you have a ranging day today? In the concept of this structure here, yes, you're in a range, but you're actually going to have a downward trending day once that high gets hit at 1762 to drive down. Yeah, it's just my opinion, guys. I mean, you can have an opinion too, but you have to think about what you're saying. Yeah, it's not a bad thought though. At least you guys are thinking about the right things, but there's no maybes in the market. Like, was there a maybe Frankfurt raided the high? Like, it did it, right? And was there a maybe London shifted and took out the Asia loan? Not really, it did it. Yeah. And again, this chart here on today looks like a mess. Like, what is this price action? But I think one of you said it on the chat. I'm confused about today's price action. And all it was is you had the opening price here, right? That was the high of the day. That was the low of the day. And now we've closed somewhere here. All price is doing is trying to make those 4 landmarks, right? The key landmarks, if you could shut everything noise in the middle, are what? Yeah, the 4 landmarks, right? I'm gonna have to get this drawing back. Hopefully, you don't leave. The 4 landmarks. The only thing you're concerned with is open, high, low, and close. Right? How do you get from those 1, 2, 3, 4 landmarks? Right? Everything in the middle is nonsense, but it's not. To get from point A to B, B to C, and C to D, there's a process of manipulation, liquidation, and continuation that goes on. Am I wrong? Yeah, that's the process we're breaking down, and that process is the process of emotions is created by opposing trends in the market, right? And severe candles being printed that look severely bullish or bearish. That's where the emotions at highs and lows come from, right? The manipulation in the middle comes from because they shift that internal trend, but they lock the external. And so then on a lower time frame, you get shifting of different trends. So you're confused. They create ranges in the middle at key levels that people are looking at, 61, 70.5. There's manipulation, right? And they come to lower zones where they should, and then they shift the market higher, because that's when majority of retail traders are not in the market. Yeah, a lot to think about, guys, a lot to think about. But the thing is, if you want to do this ping-ponging thing, yeah, you're going to have to get to a level where you think about the markets in such a deep way. You're going to have to think where emotions are being built by the market. You're going to have to think. Do you guys not think when gold shifted from this move here even to this high, there was emotion involved? Yeah, people were thinking gold is gone. This 4-hour candle was so strong. Yeah. Yeah, was there not emotion when gold ripped from 1750 to 1770 in the course of a day, right? There was. And guess what? Over here, we traded against that emotion. And guess what? How beautifully that trade worked out. You guys remember this, right? Yeah. And again, I'm not the best sell trader in the world, right? Because for me, it's just hard, right? But that took a lot of internal thinking to get to that point and rationalize that I should be a buyer at that point, because again, heavy push, higher highs and higher lows being contained in internal structure. However, why was that sell needed? Because, well, we just made a H4 high. Yeah, so to buy here is emotion. Yeah, and again, look, the middle portion, I kid you not, fib this. Yeah, fib this. What level did they stop at? Someone want to read this to me, this area here? What level did they stop at?
Retail level.
70.5, 61.8. So now you know, right, price pushes to the high, creates emotion, retraces to what? 61.8, 70.5, creates manipulation. Then you got liquidation and then continuation. Yeah? Agreed? Yeah, some sort of cycle like this. Obviously, it created equal lows here, and obviously that was a target there. So, but I'm talking about just that impulse here. They did the same thing, did they not? Am I wrong? Yeah. Created a range, right? So this was the inducement. Sorry, there's somewhere here there was the inducement sell. Then there was buys here, right? Then there was the liquidation sell, liquidation buy. Cycle repeats itself, but this is an impulse to take out those lows. So you've got to recognize within the impulse itself, which part of that impulse, which part of that cycle you're in. Are you in the part of the cycle at the extreme highs and lows where you're feeling emotions? Are you part in the middle where there's manipulation, or are you at the extreme edge where now you can look for a trade if obviously you don't have equal lows and equal highs that are liquidity targets? Okay. Yeah. What else? We're coming towards the end of Sydney now. Let's have a look. So, well, marking, yeah, so these are all equal low markings. Let me just get rid of them over here. Oops, all of them. So, then again, guys, when this on a lower time frame pushed up, look, you got fear and emotion here, you got manipulation here, and now you got what? Liquidation into continuation for this minor leg, which is part of that higher time frame thing, right? So let's mark out the Asian Sydney range. It's right there already. So this 1 p.m. I think what's going to happen, honestly, guys, it's in my humble opinion, and this might go one or two ways, but this is the way. Once Sydney finishes here at 12, it can either go one of course of events, okay? And obviously there's equal lows being built up here, but I think there's equal lows for tomorrow, just like there was for yesterday's, right? Sydney will push on, well, situation number one, and just push on to create that high of the day. Okay, that's situation number one. Number two, because there's a POI here. But again, I've got to think, yeah, if they hit that POI right now, there won't be buys later that people are looking for tomorrow when it comes back here. You guys follow me so far? And also that we know the inducement buy happens where? At the base, right? So if it's going to come, I think you'll hit this last sell to buy. If the liquidation does happen to the downside, I think only the last sell to buy zone here will get hit. Okay, I don't think the IFC will get hit. I might be wrong, but the thing is, they want to keep that IFC there for tomorrow, because when price comes here and it's coming down over here, they want people to do this on their trading views. They want them to be buying at that POI. So it doesn't make sense for them to use up that kind of play right now. You guys follow me so far or not? You guys there? Anyone?
Mhm. Yeah.
Does that make sense? Yeah. Why would they want to use up that kind of thing that they're holding to their chest right now, right? They want to keep that block there. They want to keep that IFC block visible for people. So when price is coming to the thing over here, that they can just screw them over. Because if they take it right now, I mean, people are going to be like, oh, it's already mitigated. Why the hell would I be buying? Yeah. So yeah, it's intricate, right? So where are we going with this? Yeah, so 1762. Yep, the last buy to sell zone. Yeah, I want price to go here. So I'm leaning towards for situation number one. So that's going to be the high, the open. That's going to be the high of the session. Probably 3-4 o'clock. We might print that session high, and from then I'm expecting trending market down, maybe a pullback in Frankfurt, and then to clean out the lows. But in that case, if that high is that, if the Asia high is left open, like you guys say, it might be a bearish day that turns into a bullish day, because on Friday we might just expand. Could happen. I've seen it before. Is there NFP tomorrow? Somebody said. Is there NFP tomorrow, guys? There is. Okay, yeah, it might happen. Yeah. Can somebody look at the NFP numbers and tell me what if somebody goes on the economic calendar and tell me what the numbers are, the previous month's numbers, the current, the projected numbers. Somebody can tell me those two numbers. Just go on, I don't know, my FX Street or whatever. We could talk about this as well. So NFP. Previous month's results. Predicted. Anyone? Guys, help me out. Okay, sorry. Okay, perfect. I'm laughing at this. The reason why I'm laughing at this is because even in the result that they put out, yeah, they're giving you an indication that they're going to manipulate to one side. Okay, so we have previous 235k. Somebody said on the chat, yeah? And the forecast is 500k, right? So what are they actually telling you from their forecast, right? That there is a 265k standard deviation that the dollar is going to get bullish. Yeah. Are you guys with me? Yeah. Because that's the difference, isn't it, between the predicted and the previous months. So if more jobs are created, obviously they're saying that the US economy is getting stronger. Now, what they want people to do, they want people to buy the dollar because they don't want people to buy at this POI here. And we understand that this is manipulation, and probably this is going to be more looking like a bear, which starts off as a bearish day, liquidates the downside, and NFP liquidates the high. You guys follow me so far? Yeah, there's no other reason why they put these numbers out. Yeah, what's the average job? What's the average jobs creation data? Well, how many jobs does the US create normally, historically, on NFP? Does anyone know? Anyone? Our friends, speak to me on the chat or speak it. Anyone know what the average number of jobs that are created in the US every month is? Come on, guys, have some guess.
No idea, bro. I don't know.
Do you know what I mean? The thing is, if you're going to trade NFT, you need to know these facts, right? So have a guess. Is it 100,000 every month historically? Is it 200,000? Is it 300? They, on average, historically added 300,000 jobs every month. Is it 400K? It's 500K. Is it 1 million? Is it 2 million? What do you guys think it is? There's got to be a number that's the average. Somebody said 200K, right? Yeah, so the average number of jobs, if you can Google it, is around 200K, okay? That's what historically and empirically it has been for like years and years, right? So if you know the average is 200K, what's the odds that you're going to have suddenly 500K jobs being added? I don't really know what's going on. I haven't really been following Bloomberg. There's anybody been following it? But based on what we're seeing from what the numbers they've released, it just looks like manipulation to the downside to slam the upside. Yeah, for the true expansionary moves. You guys following me so far? Yeah. The numbers are there to manipulate you. They're not there to guide you. They're not there to guide you at all. We know also Dixie is at a demand zone, so you know it's daily is bearish still. We come into fill that area, so Dixie could crash hard tomorrow, right? If the result comes out that their standard deviation below the previous months, I mean, how it's going to work, sorry, is if the result comes out that actually tomorrow the jobs data is 200K, right? They predicted 500K. That's a standard deviation of minus 300K. Yeah, that's a big standard deviation to the downside. That will make Dixie tank heavy, because they just manipulated everyone to the upside. You guys follow me so far? Yeah. The number that has, if the result comes out tomorrow that the number of jobs they've added is only 495K, which is only five job, like it's a standard deviation of 5, right? You won't get much movement in the pairs, right? But if the jobs data actually tomorrow is more towards the average 200K, right? You've got a negative 300K standard deviation to the opposing side. That's going to be a big move. In your Euro USD, your dollar yen, your like most of the pairs are going to experience some big volatility. Yeah. Any questions about that, guys? If it didn't make sense, let me know. The key point here is if you do trade fundamentals, you need to know what the average historical empirical data for the set point you're looking at is. It could be anything, whatever. They will have historical averages, right? Then you need to understand that what are the figures there to ever guide you? They're not. They're always there to manipulate. Because the thing is, what does every person do on an NFP first thing in the morning? They go to the economic calendar, look at the previous months and predict it. So is that not an opportunity to manipulate people? It is, yeah. And therefore, if you can manipulate people, you can make money off them because you can hit their stop losses. Okay. Somebody said something in the chat. I never, yeah, but you can use it to your advantage. Yeah. Sometimes I look at fundamental very early, but on NFP, I do sometimes look at it. you can tell if they're going to try and manipulate you or not. Another example of manipulated data is if, I don't know if you have seen this, if the previous month was 900K, yeah, and they tell you we're forecasting 1.5 million to be made this month. Somebody tell me what the probability of that result happening are. It does not, it just doesn't make sense. You know, the historical average is 200K exactly. And guess what? When that true result comes out more like 300 or 400K, it's like a million deviation from what they projected, and price just goes parabolic on gold and Euro USD. Yeah, that's manipulation as well. So they're manipulating the prices from the average price and telling you that something else is occurring. Okay. Yeah, am I making this up, guys? Gold is going up. Yeah, so yeah, obviously this is kind of a new way of understanding the market. I've only just been sitting there today thinking about this, but that manipulation in the middle is the real thing. Yeah, and if you can learn to understand this, then you can trade the inducements on both sides, and you can ping pong actually really on a world-class level. Yeah, so, and if you can get good at ping ponging, your accounts will grow exponentially. Exactly. Yeah, set your alert to go to bed. But anyone, what should we do? Should we call it time there, or you guys want to talk about more stuff? Any other stuff? But I mean, what else? What other stuff are you guys struggling with? Not struggling with? Need help on? Don't need help on?
How to correlate POIs with indexes?
Correlate. Okay. Yeah. So currently, you got to look at Dixie. So currently, what's Dixie doing? Dixie's just come down to this last sell to buy block, and it's shifted. So, and again, it's looking like it wants to go higher momentarily, and therefore that would make, I don't know, I got to analyze Dixie probably, but you do look at the indices. You come and look at the indices. Like when you should have seen this.
No, no, not the correlation, but I'm speaking about the volume profile with the POIs.
Yeah, I haven't really been using that a lot lately, to be honest.
Oh, you haven't? Oh, okay.
I looked at this one today on gold. I did look at this today because I was looking at, it's kind of trying to work out still, are we still bullish or bearish long term? What the hell is this? Yeah, so I was looking at, in terms of if we do go long, like what's the most reasonable place? Like this is going to stop. And again, it's my inclination is going to be this area here. 1845 is dead volume. It's an area of support, and most like probably this area, 1855 actually, now if you think about it, because it's resistance, support, resistance. So this is where the manipulation is going to occur. Yeah, and again, for this entire impulse, where is this manipulation zone? Look, am I making this up, guys? Is this not area in the manipulation zone?
Yep.
For this impulse? Yeah. There's going to be a lot of manipulation being done as you spike through liquidity here. So I'm expecting, I mean, you can TP 1845 long term would be a safe TP here, right? Another reason why I think it's going along is from a reaccumulation perspective. I know we haven't really touched on Wyckoff much recently, but I always do like to sometimes think about the Wyckoff perspective if it's there. So what the hell is this? Where's my chart? I always get terrified when my chart drawings go missing because it takes so long to redo them, but sometimes it's not bad. Sometimes, should I delete all of this? Everyone okay with this diagram? Emotions and whatnot, manipulation in the middle. Yeah, delete that. Okay, so Wyckoff perspective. You got, yeah, so price is pushed up here. Let's put the volume on here. Volume. best friend. So over here, you can see volume spike. So this was probably buying climax AR, secondary test, deep secondary test, gave you the break of the AR plane. So there's a lot of selling pressure in this schematic. Sign of weakness pushed up into the up thrust, right? So this is all phase A, building that distribution side of that schematic, okay? Then you've come down, let me get rid of this. Come down here to try and break that low, but you haven't been able to. So this is a failed secondary test impulse over here, right? Another secondary test. This does break the low. So now this is spring, okay? Yeah, this is all spring phase because it's created a new high. And the spring phase, when it happens, guys, always comes to the lowest block. Yeah, to give you your test. Once you get that, market then goes into trend. Yeah, so now currently we're in phase C, spring has just happened. We're coming down to test this area. That's going to be the C part B, and then you get continuation D, trending model into E breakout and expansion. Okay. Yeah. Another thing I did today, right, is if you notice this on the outside, I've kind of drawn a box here, right? It's kind of to do with measured moves in the market. If you want to save TP, I just doubled the height of that current range that we're trading in, right? Because if it's a reaccumulation, it's going to expand out. And if you do that, look where it takes you, it lines up with that Asia high. But now obviously from a liquidity standpoint, we know that's not really going to hold. But if you're looking for a safe TP medium term on gold, 1792 with that Asia high should be okay. Okay. Yeah. Once we break out here, we probably will make a new high at this point here, 1802, because it's above Asia high. So it's actually a true area of supply and demand in the market. At that point, you might get emotions as well to FOMO into some late buys. Don't do it. Yeah, might be suicidal. Because remember your cycle again, impulse, emotion, create a new trend, manipulation to the downside, to the 6170 plane. And then you got, yeah. Yep. Should we call it time there, guys? I think that was a pretty lengthy-ish call. Didn't want to make it too long, but going forwards, I think during the week, because we're trading, it's just hard, guys. Like you saw the result that happened like yesterday when we were on team calls. It's nice to discuss these things together, but sometimes, for me anyway, I kind of need to be alone to do this, to think about what's actually going on. So we try and keep the evening calls around this time, 10 till like when gold closes, because that's when it's dead time. So it makes sense to utilize that hours and be productive as a team, right? Go over, recap what's happened in the market, the good, bad, the ugly. And then obviously we'll alternate the times between the early times and the late times, just so everyone has a bit of an opportunity to attend those every session. So yeah. Okay. Also, volume profile is dead here. So again, look, dead contract size over here. Yeah. Be a good area to buy. If you're in the sells here, you could always hedge here. You could always remove all the risk off the market entirely and let the market decide for you, right? Once you sell at 1760, buy at 1747, put stop losses on either structures, let the market decide and take you in which direction everyone wants to go. Does it want to go lower? Okay, fine, go lower. Yeah. My stop losses get taken out at break even. If it wants to go higher, my stop losses definitely get taken out at break even. So you can hedge within this 200 pip range and let the market then decide for you where direction it wants. That's another approach you go. Yeah. I don't really trade that way, to be honest. I'd rather just think about what's happening and just be convincing in my execution and just go for it. Yeah. But that is some way traders do manage their positions. Okay. Everyone happy?
That was good.
Cool. I'll catch up with you all on Discord and the other side.
Thank you, Eric.
No worries, man. No worries. Enjoy the rest of your evening, guys. Yeah.
Thank you very much, Ali.
Give thanks, Ali.